Yeah, hello. Good to be here today and talk again. I think probably this is my fourth or fifth Noosa conference, so always great to be here, especially on a Friday morning when you're all as lively as can be. But firstly, a company overview. What's the macro environment for oil and gas just now? Well, firstly, prices are very strong. I mean, oil is still $80, even it was touching 100 recently, but oil 80 is still good. Gas prices globally vary from region to region, but are generally very strong. And that's a function, obviously, of the economic response post-COVID, but also the recognition that the energy transition is far longer and far harder than people would like. Now, what we see in the States in particular is in the last 2 months, very strong emerging animal spirits. Exxon and Chevron have started to consolidate. I expect that to continue, and I expect that to revolve around the world. And what that means is that animal spirits are being demonstrated, and that will cascade down to investor interest in our sector. Security of supply is important. The world is arguably in a new Cold War. The Ukraine war showed the value of supply to customers in Europe and the likes of Japan. Now, that's a key advantage from Australia, notwithstanding what our government tries to do from time to time. We are still a secure source of supply. Then in terms of our Mongolian asset, it's a very secure source of supply for China. So location is a theme. Our assets are close to markets, close to infrastructure. In our Queensland asset, we have access to pipelines that go to the LNG plants in Gladstone, which are running short of supply. Then lastly, we have a hydrogen project in Mongolia. That's next door to market, unlike the hydrogen projects in Australia. So here's a quick overview of our company. We have about 1 billion shares on issue, and makes it easy to work out our EV, our market cap, which is about 80 million. In terms of our team, Richard Coddy is our chairman. And just this week, Richard and I and Anna, one of our other directors, were in Queensland looking at our well. We signed an agreement with a local Aboriginal group. It was an area where Richard's been operating for 20 years since he ran QGC from about 2002 to 2008. Stephen Kellerman's an ex-colleague of mine from Santos, very well known in the industry, set up its coal seam gas business and an all-round technical hand. Anna Sloboda is from Belarus, works in the resources industry, speaks Russian, worked in China, highly relevant to all of our operations, particularly our Mongolian one. So our Queensland project's called Grandis, which for you Latin buffs you know means big, which is the size of the resource here. Location is the key point. We are in the Taroom Trough, which is a part of the Bowen Basin, not the part, as Dave said, that's getting government grants from the state government, but that's because our project's too good. So market factors are now driving new rounds of drilling in the Taroom. Now, about 10 years ago, BG Group, now Shell, spent $300 million drilling here. A lot of information came from that, and now Shell is back here in the drilling as we speak. There's spare capacity in the LNG plants, and as my peers have mentioned, there's a lot of growing supply-demand gap issues in East Coast Australia. Now, we haven't got a grant from the Queensland government, but we have got a grant from the federal government. Under its R&D program, they are paying for around half the cost of this well, and we've already received, in recent times, our first rebate from that for fiscal year 23. So this area in the Taroom Trough are what we are calling, based on work done by Wood Mackenzie, who is the globe's premier oil and gas consultancy company, an energy super basin. Now, why is this relevant to us as a small company? Well, small companies want to be where big companies are and where they will want to go. And Wood Mackenzie's thesis is they will want to go to energy super basins. That is areas where there is conventional oil and gas, or unconventional, depending on the nature of the reservoir, where there is carbon capture and storage, and there is extensive carbon capture and storage here. Glencore has a project called CTSCo, also they're in partnership with Marubeni and J-Power from Japan. Overlapping our block is Origin Energy, obviously one of Australia's largest energy companies, and we've recently done a deal with them, which I'll come to in a minute. In this region, there's also substantial renewable energy, solar in particular, but also emerging wind. So I said that we've got good neighbours here on this map. You can see that Shell is currently drilling to our immediate west. We are drilling a well called Daydream 2, which is an appraisal well located proximate to a well that BG drilled called Daydream 1. Now, various parties here have spoken about the resources that they have in their blocks. And I managed to find a document that Shell, someone had discovered. It was largely blacked out, but it was disclosed in there that they believe they've got 3 TCF of sales gas and an enormous 250 million barrels of liquids in that block there. Santos have blocks to our north and south, and we struck a deal with Santos to data share recently. Kevin Gallagher a few years ago said there's TCFs of gas in his block. It wasn't a very accurate number, but it's good to see the enthusiasm, Kevin. We've been very conservative, as is our want, and we've booked to date only about half a TCF of gas. In our block, we expect to materially add to that through this current program. Then our neighbours to the southeast is a listed company called Omega, but in reality, that's a joint venture between 2 billionaire energy families, TriStar from America, who've been in coal seam gas in Queensland for 30 years, and the Flannery family from Queensland, and they've booked nearly 2 TCF of gas to date. So all up, we can see here there's more than enough gas to fill the trains in Gladstone and to supply the East Coast in a location which is near pipelines, doesn't need to be taken from the NT, doesn't need to be shipped in by boat, it's here. And the key thing is that we're all doing work. If we do one thing and it works, everyone benefits and vice versa. So the more people doing work, the more you've got chance of cracking the code, which is a phrase often used in unconventional gas plays. Until you try different things, you're not sure what's going to work. But the more people trying things, the better. So here's our contingent resource number. As I said, about 400 BCF, I rounded up to half a T. Liquids, we're being very conservative. We're saying about 10 barrels per million cubic feet. Shell, that number I quoted on the previous page, is saying 80. Omega's saying about 40. If it's 80, then the economics are off the scale. So we're being nice and conservative on that. Now, our contingent resource is booked only in the sandstone parts of the Permian Formation. There are also extensive coals, and they've never been flowed or tested to date. Part of our program is to stimulate them. If we get them to flow, the contingent resource can double and treble and quadruple. So here's our current project timeline. We are drilling. We announced a day or so ago, we drilled 500 meters a day. For those who know oil and gas drilling, that is exceptional. This is good drilling country. That goes directly to your development economics and risk in the medium to longer term. We expect to get to TD in a few weeks' time. In the meantime, in the next few days, we will stop and do testing for origin. They're paying us $1 million and any incremental costs on top of that $1 million to get access to data here for carbon capture and storage purposes, which goes to my thesis about this is an energy super basin. We will do testing in January. We will ascertain the optimum structure for a stimulation program. We currently plan a 5-stage stimulation program. I'll use the word frack in this audience, but normally I try and avoid it because non-scientific people don't like it. We're working with what we believe to be the world's best technical consultants and service providers to optimize chance of success here. This program will culminate in a flow test and will put us on the path in the success case to start to book reserves here. And once that starts, we expect very high likelihood of interest from considerably larger companies. So we have quite a number of game-changing objectives. This is an appraisal well, as I mentioned. We believe that we'll find 500 meters of gross vertical pay. The stimulation program covers multiple target zones in that, coals and sandstones. We will be on the pathway to confirming the liquids content, and we will affirm the low carbon dioxide, which, as my colleagues have mentioned earlier, is vital in any modern gas development. We'll undertake what are called defits to ascertain stress and optimize the design of the stimulation program. We'll expand contingent resources. There's R&D aspects to this, which is hence why the federal government's paying for half of it. We'll be doing something which I think is new in Australia, using what are called microproppants to increase the productivity of the stimulation program. We'll gather data for a scalable development plan, and I say scalable because we've said 500 wells, it could be thousands of wells. I mean, this could be a replica of the CSG boom in Queensland, albeit in a different and deeper formation. The design of the wells could be vertical, could be deviated, could be horizontal, could be a combination, but the more work that we're all doing, the better in terms of optimizing that. We also have an asset in Mongolia, which is what I've typically spoken more about in previous years. It was a foundation asset under current management in Elixir. We have 100% owned, as is our Queensland asset, a production sharing contract located close to the Chinese border and also close critically to a mine that Rio operate called Oyu Tolgoi. I mention that because, as you might know, those who follow Rio, they've made very aggressive promises to reduce the emissions that they cause in their mining activities. They currently burn a lot of diesel, then they import coal-fired power from China. We've got gas. We've also been measuring renewables there. We've got a hydrogen project. One could infer that we're talking to Rio about how they meet their aggressive emission reduction targets, and I'd like to tell more about that as and when things come to fruition. On the technical side, we have a pilot production project going that's been on track, on the go for nearly a year. We've flowed gas, we've flowed water, we've gone up, we've gone down. We are in a typical testing phase for an early stage coal seam gas project, and we believe we're on track to, in the course of next year, get to commercial flow rates, knock on wood. So quickly on the pilot, the picture there of the flare was about the best day that we had. But we've had some pretty good other days. That was more than 200,000 cubic feet a day. It was a bit of flush production. But our current objective is to produce water very slowly and carefully, similarly as described by my friend and colleague from Galilee, to ultimately depressurize the reservoir and liberate gas in a sustainable way. We will continue to undertake that pilot through the balance of this year and through to next year. And it was very pleasing to see that our peers in the region, and some of them are in the back of the room, we'll be talking soon, are doing the same. We are increasingly cooperating with them, as we noted in the context of our Queensland asset. Cooperation in large unconventional plays delivers positive results for all participants. So Gobi H2 is a green hydrogen project located in Mongolia. Now, why there? Well, because you're next door to market, and hydrogen is very, very expensive and difficult to move. So if you're next door to the market, for instance, the steel mills in China, and that's half the world's steel production, could conceivably use hydrogen to replace coal in the future. Last year, we struck a partnership with one of Japan's largest companies, SoftBank, to progress this project. Earlier this year, they sold their renewables businesses to another very large Japanese company called Toyota, who you might have heard of, and we're working with them to, under an MOU, to progress this project. Hydrogen is a long-dated thing. We're taking advantage of our skills that we've built inside the country, and for instance, the likes of Rio as a local customer, but ultimately the long-term customer is in China itself. So here's the highlights. We are drilling a well just now called Daydream 2. It's the highest impact well that Elixir's arguably ever drilled. We have a timeline that will generate news flow through the rest of this year and through the first half of next year. We expect to add significant contingent resources, get on the pathway to booking reserves, and the fact that other operators are doing things in the same region is great for all of us. Now, Shell will never tell us anything, but gossipy drillers will, and if I can then relay those things in these sorts of forums, I will try and do so. Our CBM pilot project in Mongolia is ongoing, and we expect to deliver results from that through the course of next year. So in this financial year, we have multiple news flow and value-adding items coming, material resource bookings, de-risking on various fronts, and progressing our projects. Now, our teams in Australia, as we saw from the board, are highly experienced, but also as alluded to in the prior presentations, we like to build a team as close to the asset as possible. In Mongolia, we've got a great team that we've been building over the years there, and it's really pleasing to be working with them to upskill in that country. Now, the Ukraine war did arguably change the energy world. It's demonstrated the key of security of supply, and we believe that both of our asset areas encapsulate that principle very strongly. Our balance sheet is good. We have 100% ownership of our assets, which gives us the flexibility to bring in, hopefully, very high-quality partners, as we've demonstrated we can do with our hydrogen project, and gives us the option on strategies going forward. We procured multiple funding sources which have been non-dilutive. As I say, the federal government are generously paying for half of our well. Origin's contributing at least $1 million free on that as well, and we obviously keep working on those sorts of sources to the benefit of our shareholders. So thank you very much. Pleased to be talking today.